Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. Okay, so the big picture here once again is, dominated by the dark blue, late September 24 to early March 25 bearish Andrews pitchfork, especially in recent days on the overhead upper time, currently at 97.53. 9 weeks ago, and then again briefly 7 weeks ago, prices based themselves on the middle time, currently at 88.26, as well as back then the 50% Fibonacci line for 2025 at 91.33. The market had passed up through on both occasions over what had been resistance at the combined 38.2% Fibonacci line of October 20 to May 23 move at 92.56, as well as both the medium moving average, currently 94.74, and the gold long moving average, currently 93.91. However, the push upwards was met by a fresh cap from the combination of three specific nearby congestions. The first is the 50% Fibonacci line of the October 23 to May 24 move at 94.80. Now this is an integral part of the 93.95 to 96.06 congestion. The second had been the bright red neckline extension, currently at 95.03, of the recent November 24 to February 25 reverse head and shoulders bottom, though this had been acting more as a support since mid-May. Finally, the third is the green short medium moving average, currently at 94.42, which likewise is acting more as a support these days. Personally, I don't like having all these three major moving averages also closely grouped together. Eventually the market stabilized over these and started moving up to test the dark blue upper time and a wider, if more gossamer area of congestion overhead between 97.50 to 99.95. Now I should point out, as I said 2 weeks ago, and I quote, "The earlier ammunition gathering exercises lower down are now starting to be deployed in an attempt to try higher." End of quote. I'd now like to once more recap, as I've mentioned here so many times before, of the three congestions which we seem to be working our way up through. The first was the 91.83 to 91.86 and is the weakest of these congestion areas. The second is between 93.95 to 96.06 and is the one we came clogged down within over April and May, and on which we currently sit upon. The final one is the higher one up between 97.50 to 99.95. Overall, we have been chewing our way up through for quite some time the 93.95 to 96.06 congestion area, and we have started to emerge on the upside. It would be the cruelest of blows to the bulls out there if the ammunition for this attempt higher should finally run out anytime soon, as the dark blue upper time seems to be pressing down on the rallies. Nevertheless, just remember the next congestion area overhead is between 97.50 to 99.95. LME 3-month aluminium. As I've stated here many times, there are a number of patterns here, one within another, all happening at the same time, all affecting the market in their own way. To start with, and it's by far the most consistent one, is the bright red shallowy bullish shift pitchfork for the mid-December 23 to late July 24 move. For a while in March, we saw prices starting to establish themselves over the middle time, currently at 26.61. But as I stated 11 weeks ago, and I quote, "It was a tenuous hold over it, and prices dropped down through it and have remained below, pushing further down. However, this pattern still works at the lower time, currently at 23.52. And I added 10 weeks, end of quote, and I added 10 weeks ago to this, and I quote, "This is one to keep on this daily chart, as the low of the move has been right on the bright red lower time." Additionally, nearby we have the bright green neckline, currently at 23.60 of October 23 to May 23 head and shoulders top, October 22 to May 23 head and shoulders top, and the purple neckline, currently at 23.66 of the March to May 23 head and shoulders top. Both these have been pierced, but we have not as yet closed below either. End of quote. Well, since then we've seen the bright red lower time punctured but repaired, with no closes below it, and this action worked pretty well at showing the low of the recent move down. The bright green neckline was breached, but with only one close below it, and the purple neckline was breached with two closes below it. One of those was barely below, Thus combined, these all eroded the bearish incentive enough to halt the immediate declines mid-April, basically in between the bright red lower time below and the bright pink lower time above, and that's currently at 24.52, and that's of the breached and now possibly looking to be repaired bigger, a much longer term November 2015 to April 20 bullish Andrews pitchfork. From late April to date, we have seen a number of attempts at piercing higher up through the significant 50% Fibonacci line of December 23 to May 24 move at 24.54. I referenced this 50% Fibonacci line because I did say 12 weeks ago, prior to all the big moves down, that, and I quote, "In truth, I could see any significant move down carrying on till the 50% Fibonacci line of December 23 to May 24 move at 24.54, end of quote. Now, the recent bearish pressures of the green declining short medium moving average, currently at 24.51, managed to cap and then press the market lower until really early last week, when prices finally broke free higher, tackling the next overhead resistance of note, and that's the 50% Fibonacci line for the whole of 2025 at 25.18, and today seemingly pushing up over it properly, despite numerous attempts late last week and earlier this week, which had earlier failed. So looking back 8 weeks ago first, and ever since, I said, and I quote, "Right now I'd say the market is contemplating one of two actions: to either treat this as a potential bearish halfway hesitation move, or do what it did back in July and August last year at approximately the same levels and turn back upwards." I'm watching prices and their reactions to the overhead pink lower time and the bright red lower time below, and I'm also on the watch out for any false breaks as well, end of quote. 5 weeks ago, we saw an attempt higher that ended up being capped by the combination of the declining green short medium moving average, currently at 24.76, and the 50% Fibonacci line for the whole of 2025 at 25.18. Today, we're above the 50% Fibonacci line, but we are now up testing the next significant dynamic resistance, the slowly declining mauve medium moving average, currently at 25.39. Indeed, we have pushed up through this as I've been compiling this commentary, and we are now eyeing the overhead gold long moving average resistance, currently at 25.58. To be honest, beyond this, we have resistance at the December 2021 low at 25.81, at the various levels at 25.63, 25.69, 26.08, and 26.22, but these are not that great. So we should see a move up to the big old 50% Fibonacci line of the 2008 to 2022 move at 26.75. However, let's not get ahead of ourselves. We still have this gold long moving average to tackle first. This is also now starting to clarify something as to what is happening and has been happening since mid-April. This ties in with what I said 5 weeks ago, and I quote, "The action since mid-April is more akin to what we saw back in July and August last year, for now at least. So I'd look at how well we stabilize over the pink lower time, especially what will happen should the green short medium moving average, should it reach the pink lower time. I suspect a possible cusp is happening with these two, but just be careful of false breaks." End of quote. This has especially applied today, as this week the green short moving average has touched the pink lower time, and we have seen the potential start of a significant move this week. LME 3-month lead. The key feature here, and some of them some of them have been here for a while, all relate to a very large broken descending triangle or a related broken descending wedge pattern. Both are made up from an early July 24 to early March 25 broken purple downtrend, now well and truly broken, and for the descending triangle by a bright red broken early August to late December 24 head and shoulders neckline, currently at 1956, which had been acting recently as an immediate support zone. For the broken descending wedge pattern, well, this is made up from below by the dark blue broken neckline extension, currently at 1888, of the July 23 to February 24 head and shoulders continuation pattern, as well as the common purple broken downtrend. 16 weeks ago, prices broke higher out of this pattern, breaking higher a second time 12 weeks ago. In both cases, this was over the now flatlining gold long moving average. Back then, that's currently at 2005. But back then, they both peaked at or just under the December 2024 high at 2103 before turning lower. In the whole process, the market made a small March-based double top pattern, even Adam type, and when it turned lower, it achieved all the targets on the downside during April. In early April, prices broke down through the bright red neckline and the dark blue neckline, such that we can regard the move higher over March and early April as a false break. To the move lower during April, I also added 10 weeks ago, and I quote, "I'd like to see some more action down here to confirm that this is also not a false break," end of quote. Well, we didn't see that necessary confirmation, and prices from mid-April until mid-May have moved back up, negating any downside targets for the descending triangle pattern. During the last 7 weeks, the market started tackling specific overhead resistances, formed from the mauve medium moving average, currently at 1983, the green short medium moving average, currently 1961, and testing the overhead congestion area, made up from lesser Fibonacci lines between 2001 and 2003, plus just above this, the flatlining gold long moving average. We also have around here a small congestion area between about 1971 to 2021, dating from early February to very early March, though I'm unsure how good this is. The seeming stabilization over the bright red neckline and the newer stabilization over the 50% Fibonacci line at 1971 suggests further attempts higher. However, the resistance from the various moving averages and the small congestion 2001 to 2003 seem to be up to challenging it, and prices have been somewhat bracketed. Indeed, we have the opportunity now to have a small mid-April to date ascending triangle pattern, made up from below by the bright green mid-April to date uptrend, currently at 1965, and on top by the gold long moving average, currently 2005, and possibly the congestion between 2001 and 2003. We are fairly advanced along this potential ascending triangle pattern, though I am loath to lay out any targets or even potentials here, as we're still rattling around within this pattern. Additionally, we are so far advanced within this pattern that the chance of false breaks is quite high. However, there's one other point I would like to make, and it is a point I've been making here since the start of this year, and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December last year, we saw that the 2024 had created here a very large and rare annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year in this metal in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.